I'm Billian, the Director of Abundant Accounting. We are at the forefront of digital transformation. So far, we have helped more than 200 small businesses to streamline, automate their sales and accounting processes using cloud-based accounting solution. We use QuickBooks Online because of its technology and its flexible platform for us to tailor to our customer needs. QuickBooks is important tool for our client because they are able to use the report that we customize to analyze their sales and profit. As a result, they are able to enhance their decision making and has a competitive edge over their competitors. My client has told us that QuickBooks Online is easy to use, can be accessed anytime, anywhere, and they have many live reports to manage their customer, sales, and products. We have used QuickBooks Online to analyze our costs and sales. We are able to use the sales performance report to identify the top performer, and at the same time, we are able to reward them accordingly to achieve the desired result. We also use QuickBooks mobile app. We find it easy to use and we are able to issue invoice on the go, especially when we are not in office. Many of my customers are happy to go paperless. We are able to reduce tedious manual processes and focus more on higher value services for our clients. Working with QuickBooks gives us the opportunity to provide valuable feedback and product direction so that they are able to help our clients in their future digital journey.
I have a dream where one day each school board, church committee, policing forum, sports club, community group, NGO, association and political party branch will have as its treasurer a SAIBA designated accountant. In my dream, this army of SAIBA appointed treasurers will cover Southern Africa as a blanket of green, assisting with rebuilding communities affected by months of lockdowns, state capture and service delivery issues. As treasurers, our army of volunteers will have a big task, motivating and encouraging communities to rebuild, as well as keeping the books, accounting for income and expenses, calculating projections and improving systems and management. But more importantly, if you sign up to our army, you will be able to make friends and influence people. Imagine 10,000 SAIBA members servicing 100,000 committees and boards and the influencing power at our disposal. The books of Dale Carnegie, Jordan Peterson and Saul Alinsky will be our field manuals on how volunteer work can lead to dramatic changes in economic and social structures. Often, it is these structures that prevent us from growing our firms or gaining employment, which restricts our ability to put food on the table and care for our families. In my dream, we can influence how these structures are made and used and co-build new ones that truly serve the needs of communities. The Practice Management Conference and Roadshow 2021 is the first step we have to take to follow our shared dream. We have to know how to manage effective firms, as this is essential to living our dream. Listen, learn and network with the presenters and experts, then join us on the National Roadshow as we meet with municipal and business leaders in our hometown, sharing our dream with them and deploying an army of influencers. Let's go forth and multiply.
Hi everyone, I'm Russell Ngobeni. I'm a business accountant in practice with SAIBA. I'm also a board member with SAIBA. I have spent the last 10 or more years in the training and skills development sector. I've trained and placed over 800 youth who were previously unemployed and are now into different designations in the accounting sector. So I am today going to take you through the training on how to put together a business plan both for you and your clients. So in doing this, you are putting together a financial strategy both for yourself and your clients. I have in recent times with the economic downturn because of the pandemic and everything that has happened in the country and globally received many requests from clients who needed business strategy, financial projections, financial statements. So this brings about a great opportunity for both yourself and myself in your practice as a SAIBA designation holder to sort of put together a decent business plan for yourself as well as a business plan for your clients. So this will bring about great opportunities for yourselves. So I have put together a very good financial tool that is going to assist you draft business plans even better. We are not going to go into the theory sections of the business plan because I strongly believe that you are capable of doing that. You are capable of putting together your strengths, your weaknesses, threats, as well as opportunities, as well as all those other parts of a business plan. So we are going to dive directly into the technical part, which is the core of the business plan, the financial strategy of the business, which is what your business will survive on, which is what your clients or businesses are going to survive on and depend on mainly. So now let's go into this spreadsheet that I've put together, a very good toolkit that is going to guide you on how to do business plans even better, especially the financial part of it. So you can have a look here. As you can see, it's financial projections. We've got there the name of your accounting practice. You can name it whatever it is that you want, but we'll come back and edit all of this in order for this to work even better, both for you and should you be doing this for your clients, you can easily work on this template. I believe that you are going to get a copy of this template that we've put together for you in order for you to get the assistance that you need. So on this template, we've got various tabs that are going to talk to one another. We've got various tabs that are interlinked. We've got formulas that are built into the system that will guide you and assist you in putting these together and make sure that it sort of flows into a nice financial projection for your company. We're gonna have the cover page, obviously, because it needs to look neat, it needs to look nice. My artwork skills are not so great, my graphic design skills are not so great. You can edit this and better this yourself depending on how you like or wish. That's what I can put together for now. So we're going to have a startup cost because you are starting on business. So we are going to outline some of the startup costs, and we'll come back to this sheet and populate some of the figures and some of the information in here. And then you're going to have a better understanding of how everything flows from the first sheet, which is the cover page, all the way to the financial projections that you need. We are going to have a look at the cost and sales analysis of your business as you are starting out. So we will sort of break down all this cost of sales. You're not going to have, as you may know, your accounting practice is services based. So you're not usually going to have your direct cost of sales as in product purchases or products and goods that you buy and sell directly. So the next tab that we're going to look at, or the next sheet of that we're going to look at in this series of Excel worksheets that we have here put together, is obviously you need to plan for your staff costs well beforehand, because the one mistake that many of us do is that we hire before there's even an opportunity in the business to employ. Because I know somebody who needs a job, or I know somebody whom I've graduated with together, they're unemployed. I say, hey, come please, there's an opportunity, we can work together in the firm. But you need to put together, you need to have a strategy, more especially the financial strategy in your business. This is so because we are aware, or we should be aware as accountants, that the labor laws of this country is very difficult, especially when it comes to labor employment and the likes. So it's very important for us to have that strategy in place, know whom we are going to employ well beforehand, because yes, you might not have a contract with that person, but the fact that they wake up and come to your employment almost more than twice a week, if I remember correctly what the labor law says, then that person is then deemed your employee for as long as they are there. And one thing that I've picked up mainly in my experience of doing books for many clients that I've dealt with, is that there's a very big misunderstanding when it comes to all the monies that owners withdraw from their own businesses. There's a big mismatch between what they understand and what they're trying to implement onto their businesses. So it's very difficult for owners to sort of run their businesses better when they do not have a financial strategy, when they do not have a salary plan even for themselves. So they just run onto their company and withdraw and swipe here and there, and it sort of affects your financial strategy if you do not have it in place. So on this template, on this tab, or in this sheet, we are going to have a look at some of the planned figures, some of the, as we're also going to plan for escalations, because in the next year and the other year we need to put together some sort of a plan for inflation and changes in lives and livelihoods. So it's very important for us to plan for that well in advance. So I've put together here a 3-year sort of salary plan for both yourselves as managing directors of the company, whatever you want to call yourself. If your company is big enough, or if in the second year or third year you're thinking or planning of having a chief financial officer or chief operating officer, then you can put all of those together. But some of these may not be relevant for now because your accounting firm is just starting out, but it's never too early, and we are allowed to dream all the time. Some of this, like I said, will customize to suit your specifications. Marketing officer, like you can see here, admin officer, janitor, receptionist, chef, general workers, whatever it is that you may need, you can customize this template and have some sort of a financial plan for your business. We'll come back and put the numbers, and as you can see, I've put populated in year 2 a plan for an 8% increase, in year 3 a good 10% increase in salaries, but we can play around with those figures and take into account, like I said, like I've mentioned just moments ago, inflation and the likes. From there, we are going, you will see that it's blank at the moment. We are going to, as we populate the earlier sheets, some of these sheets are locked, and they are going to populate as some of these numbers come through or pull through from the earlier information that you're going to type onto the system, onto this toolkit that we have. So some, like this graph, is going to populate by itself, but you will see how this comes together as we go along. That's a sales forecast for 12 months, meaning 1 year. We also have a sales forecast for 3 years. Most business strategies, most business plans, whether you're submitting it for yourself or for your clients who need funding, who need this or that out there, but they normally would require the first year to be broken down into monthly, and then they will need to see how the business will do in the next 3 years or so. They will also need to see how the business will do in the next 5 years or so. Okay, so I've put on the right hand side some sort of a playground, some sort of an allowance for us to use as accountants as we're planning our practice, some sort of a growth area where we can play around with the numbers and say, perhaps in year 2 I would like to grow my practice with 10% or 20%. So we are, like we said, going to populate all of this. I'm just giving you now a quick run through all these sheets before we come back and work on them. And like we said, most of them, like the graph you see here on top, will populate as soon as we put numbers here. So most of these sheets will not even need you to type in any information. Like we said, 80% of the spreadsheet will populate by itself. So it's just the first few, like you will see, that will need your human input. We also have some highlights which are going to highlight in year 1, year 2, what the revenue of your practice will be, what the gross profit will be. Like remember, we said gross profit will be relative to what it is that you're supplying. So this will take into account, as you know, accounting and accounting rules and standards, what you define as cost of sales. So we will have revenue less cost of sales, mainly used for those who sell goods and products, but for us services, perhaps it will be best to align those services that are directly linked to the delivery of your accounting services as cost of sales. But you can have, again, maybe a look at the definition of cost of sales and apply it even better. So this will give us a highlight of everything that's going to happen. We need to see the percentages at which your practice will grow in the next 2 to 3 years. It's also going to highlight your net profit. Are we in the green, are we in the red? What do you need to adjust in order to do better in your accounting practice? What's also important is for break-even analysis, meaning how many sales units, but we're not selling any sales units. So depending on the services that you are going to render out, whether you're billing through hourly services or you're billing through the hybrid or the new pricing methods, whatever it is that is defined out there. The question is, how many of those do you need to put out there in order for you to break even, in order for you to cover all those costs that we'll speak about or we've spoken about in our startup costs? How many of those do you need to sell in order to meet your monthly target or your monthly demand for salaries and some of the fixed costs? So we are going to have a look at this break-even analysis, which is a very brilliant tool to tell you if you're on the right track or if you are just below your target in your accounting practice for that month or so. So as we said, the profit and loss analysis for the first year when you're doing your business plan financial projections, it will need to be broken down into a monthly breakdown. So like you can see on the screen, this financial year will run from Jan all the way to December, but this is not how many businesses are set up. They are set up to run from March, so you can easily change that to March, but like we said, we'll quickly populate these together and then you will see how everything falls. So you can customize this to suit any financial year, whether it's starting in August or September or May, whichever month you prefer. You can easily change there, and all those other years will change as well. Profit and loss for year 1, 2, and 3 are summarized. They don't need to be as detailed as profit and loss for year 1, which is broken down very, 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 very much into detail. We are also going to have a look at profit and loss for a 5-year period, which is very standard for if you are going to need financial assistance to set up your business. When we populate the startup costs, you will see, or you may see, that perhaps the money that you have or the money that you have set aside for you to start this accounting practice, perhaps it's not enough, so you may need a loan here and there. Who knows? We'll never know. But should that happen, a 5-year financial projection will be required, is always required. So it's very important for you to have a highlight of where your accounting practice is going in the next 5 years as well. One or many mistakes that we do as accountants, or many of us who started businesses some time ago, is that we're just hitting and hoping. We never know, we never plan. We're just hoping that we go out there and we're hoping that we will make money. And we've learned the hard way that money is not very easy to make. Second last, if not mistaken, is the balance sheet, which is very standard. Take into account that most of these names have changed. It's a statement of financial position. You should know, you do know that. So you can customize all of those to suit the new financial reporting standards. I've just simply simplified it here to say balance sheet for ease of understanding. So you can customize this to statement of financial position. The previous one, you can customize it to the new names as you wish. What's important here is this template that is in front of us now, is this sheet that is in front of us now, which refers to the loan amortization schedule. So this is if you need a loan to start your business. So after this, we're going back to startup costs and we're going to populate that area to see if we have enough money or not, or whether we need a loan or not in order for us to start this practice that we have. How did you pay up for those SAIBA costs in order for you to obtain that designation? Did you finance it yourself? Was it through a loan? Was it through it doesn't really matter, but it's very important for you to put together some sort of a plan. Also, how to recover those money backs if you've invested some of your own cash into the business. So it's very important for you to have some sort of a structure in that regard. So a loan amortization schedule is very easy to get. You just simply right click, and then if you go onto insert, you will see that it will give you spreadsheet solutions, and you just simply click on loan amortization, and then it will populate a blank loan amortization schedule like you see in front of you. Right now you can see that mine is grayed out because I've protected this workbook. Like we said, there's a lot of formulas that I've put into this workbook, and I do not want to tamper with them because everything needs to flow, everything needs to talk to one another. So should I make a change to one thing, everything needs to flow together. So that is the reason you see that grayed out. But this is exactly how you get that loan amortization schedule. It's not very, very difficult to put together. So now let's start putting figures into this spreadsheet and see how it all comes together like magic. Let's go back to the beginning, startup costs. So I have already put in some words or some text in there just to save us some time. You will see these are some of the simple and standard examples that I can think of from the top of my head. And quickly, you will need a computer or two in order for you to start a practice. So whether it's for yourself and your staff, you will need some computers. I don't know what figure we can put for computers. Let's say perhaps we'll need 5 computers. So I simply say equals to 5. Your Excel skills need to be up to date, but you cannot be an accountant if you're not friends with Excel. Otherwise, you're not gonna make it. Even these nice templates, even these nice systems, your QuickBooks, your this and that, your DraftWorks, all of these partner systems that we use, they were all built from Excel. They were all built around Excel, and most of them still use Excel and Excel formulas in order for them to run smoothly. So 5 computers, I don't know at what price. Well, for accountants, if this is for your own practice, out of the top of my head, let's say 7.5 grand. You will see already that you need 37,000 in order for you to start or run this practice. Otherwise, you're gonna have an employee there without a computer, without a desktop, and then they're not productive. Internet connection setup is another example that you need in order for you to start your practice. This I'm referring to the IT guys who perhaps will come and you don't need to install your router, but guys who will come and set up if you've got an office, if you're thinking of going to an office, but we're more now moving into remote work and remote working. So it's up to you what the setup costs when it comes to internet connection will be. Perhaps purchasing those routers for all these employees. I don't know, out of the top of my head, let's put a figure of setup cost of I don't know, 8.5 grand. Office furniture, if you're going to set up an office, like we've just said, it's a decision you need to make between remote working and office. It's up to you. So perhaps let's assume you do still need to set up an office. So whatever those costs will be for office furniture, the desk and blah blah blah, let's say for instance they add up to 50,000, and put it there. Deposits, like you said, if you're setting up an office, you will need to put on some lease deposits there, so you need to plan for that. Like we said, don't just hit and hope. You need to have some sort of an insight into the future before you even step in there. So usually deposits will be whatever the lessor, if people are still going into lease, put out there. So let's just put in a weird figure, not very weird, let's say 11,500. So already you can see it's adding up, and you will see that your total startup expenses is adding up to 107,500. For argument's sake, you can list as many startup fixed costs as you like. The spreadsheet is there, the space is there. It's up to you what you want to do with that. So out of this 107,500, how much of owner cash do you have? So let's say you've only saved 50,000. Let's put 50,000 there, and then you will see when you scroll down that the total for owner funding also adds up to 50,000. So it means that from bank loans and other means, you still need to make up the difference between 107 and 50. So you can simply use Excel to calculate that. I need 107. But I've got 50, so it means I need to go to the bank or go to a friend or go wherever it is that I need to go to borrow 57,500. So quickly, let's go into our loan amortization schedule and see if that has populated. You will see that I've put in a formula already to say, please go and pick up anything that talks about loan from that startup cost. So now that we are on our loan amortization schedule, you will see that 57,500 is already populated. So this is where your Excel skills come into play. So easily we can populate the rest of this sheet without even having to go back, because now we need to know how much we need to borrow. So annual interest, I don't know what the annual interest rate is. Let's say 10.25 per annum. How long will the loan be? Okay, so let's have a look now at the loan repayment in years. So you can have a look at that and say perhaps 3 years, perhaps 5 years. It's all up to you. Let's just say 3 years for argument's sake. Number of payments per year, it's usually every month. So there's 12 months in a year. So you need to pay these through 12 months. So you put 12 there. So you can see as you're putting in the figures, you're putting in the numbers, the spreadsheet is coming together. It's populating and it's giving you some sort of numbers. Start date for the loan, it's up to you. When do you want to start, or when do you want to borrow this money? Let's say, let's put this date to be in the future. And then we put it from the 1st of June 2022. You will see now that all of those dates, your first payment will start on the 1st of July 2022. But what does this tell you? It tells you, it gives you an idea, because If you do not do this, you do not have an idea of how much interest the bank is going to charge you. You do not have a clue of how much you need to pay monthly and how much you need to plan for in your financial cash flow for this loan that you need to take out. So you were just going to be shooting in the dark and say, we're going to take out a loan, and this will affect obviously your cash flow, your financial cash flow. It will affect as well your break-even point. So let's have a look at these in detail. So we can see it gives us an idea of where our loan starts. So it starts on the 1st of July 2022, and it gives us an idea of how much we need to pay going forward. So we can see from the spreadsheet that our loan amortization schedule tells us that we need to pay off, or we need to pay 9,536 rand 30 cent in total interest, not each and every month. If you look at some of these columns, like we can see in column F, it says to us that we need to pay 1,862 each and every month. This payment could have been very easy for you to miss if you do not do this, if you do not have this template, if you do not do this financial projection. So it could easily throw you off. It could easily set off your cash flow by nearly 2 grand each and every month. So this loan amortization schedule gives us an idea of how much we need to pay each and every month. So we can see from column F here that it gives us an idea that we need to pay at least 1,862 every month. If you do not do this, it will set off your financial projection. It will upset your financial cash flow at least by 2 grand each and every month. This could be a lot higher if your loan is 500,000, for instance. So this can be 10 times higher. So you can see already that you need to pay off interest of 9,000 and some change, and that needs to be planned for. So that is some of the planning that you need to take into account. So let's quickly run into profit and loss here one and see if we've picked up anything from any of the information that we've populated already. We can see when we look at row 33, the interest expense is 491, it's 479, and so forth going across the year. Where does the system pick up all these figures from? If you go back to your loan amortization schedule, you will pick all of these figures up in column H. So you will see that without putting any input in, without inputting any figures onto this profit and loss year one, already by just telling the system on startup how much you will need to borrow, it sort of ran across and sort of populated the loan amortization schedule for you and populated a section or a portion of your profit and loss year one, which needs to be detailed. So let's go back and have a look at the other sections of your startup costs and the rest of the spreadsheet that we've put together. If you've got a bank loan or lease agreement, you can put it there if you're planning to have one. If you've got a grant, there's many grant opportunities which are out there for youth who are in business and for people who are in business. If you think you're going to get a grant, it's very easy to put that figure in there, and it will change some of these figures. But it's best to plan on what you have than what you hope for. So let's quickly go on to the cost and sales analysis. The cost and sales analysis, like we said, or like I've explained earlier, is what you are going to sell, but we're not selling products, like we said, so it's your services. So there's different types of pricing strategies that you can put together, whether you bill hourly or you use the hybrid system or you use the menu option. It's all up to you. My favorite one is the menu option, which is argued out there as one of the best, but like we said, you all have a choice of how you want to bill. So what is the menu option that I'm talking about, the menu pricing option that I am speaking or referring to? So the menu option is where you give the clients a choice to choose between various pricing options in front of them, and it's something that you carefully worked out behind the scenes. So you give them a series of options for them to choose from, and psychology says they'll almost all the time run to the middle option. So put your best one there. But there's better people who are better qualified and better experienced when it comes to speaking about pricing strategies than I am. So please look up those topics. I think we had one with SAIBA earlier in the year. I cannot remember perfectly the time and the topic, but please look those up and learn more about pricing strategies. So we are going to use that menu option where we give our clients options. Let's have a look at the first one and say we've got those who are starting out, and we've got our standard pricing option, and then we also have our premium pricing option. So on starter, or whatever it is you may want to call it, what do you charge per month? This will vary because clients will differ from one to the next, and the number of transactions and the amount of transactions will vary. So like we said, you need to carefully work this out, because the minute you publish your prices out there, it can work in your favor, and the opposite is also very true. So for starter, for instance, these are people starting out. Let's say you charge them 750 Rand a month. Standard, let's say you're charging them, I don't know, 1,850 per month. And for premium, let's say for argument's sake, those who are well established, you set up your accounting practice and you want to charge these guys maybe 3.5 grand, you can take this higher. It's up to you. I'm just making up numbers now. So it's up to your judgment and your own calculation and your own strategic plan to say, how many of these units do you plan to sell each and every month? How many of these starter clients do you plan to have at the end of each and every month in order for you to break even? Remember, we spoke about break even. So let's say, for argument's sake, your target is that I need to have at least 15 clients on starter. So already you can see that from your practice, you're going to generate at least 11,000 rands from those clients alone. But remember, there's cost involved, so you need to take good cognizance of that. Standard, how many of these do you plan to have? This is your best, remember. So always make sure that you put your premium on your best foot forward when it comes to the middle one. So let's say, for instance, you're planning to have, you can have big numbers here. I'm just putting in numbers that come to my head. So let's say 35 clients on standard. You can get up to 350 if you wish. And if you trust your own marketing strategy, some of my colleagues were talking or will talk to you about marketing and how to get these clients. So work out the numbers and see what you can get and what you can put together. Premium, this will not necessarily be always high, but it's always best to have them. If you have them as on a high number, even better for your practice. So let's say 10 for now. So already we can see that our practice, if we run this these pricing options like we are, or we have set them up here, we are going to generate at least 111,000 each and every month. You can multiply this by 10 to get to whatever number that you want. It's up to you and your strategy in this business. If you've got other income, you can put all those information there. If you're thinking you're going to generate other income from elsewhere, you can populate all of those, but we're going to leave it for now. Cost of goods sold, like we said, if you're selling goods or if you're doing this for your clients, if they've got cost of goods sold or direct costs that are linked to the delivery of some of these services, this will be your cost of sales. So for us, you can either put those services here or you can expense them. The net effect in accounting, like you know, is going to be the same, because expenses will always decrease your profit. So whether you put it up on cost of sales or whether you expense it down on operational expense, it's not going to have an effect. You just have a better understanding of what cost of sales is and apply it there. I've got product 1 here and I've got product 2 on the right hand side. You can change that to services. You can link that directly to your menu options on top. It's all up to you, but let's leave it like that for now. So let's have a look going forward what some of these things do. So when we go, let's quickly go to sales forecast for 12 months. You can see that already it has populated some of this information, and it gives you nice graphs of how much you're going to generate, both from starter, standard, as well as other income. We didn't do anything on this spread on this sheet. It populated itself and makes and saves us a hell lot of time. Let's see what else it does. If you go to year 3, you will see that some of the information is already populating. We've got your starter, you've got your standard, and you've got other income. You can have premium there. and going forward. Let's look at some of our highlights. You can see from our highlights already that we've got all that information that comes from the first sheet that we populated. It's already starting to graph up, it's already starting to take shape, it's already starting to sort of work out for you. But here, remember, your net profit will always be high, your gross profit will always be equal to your revenue, because you do not have cost of sales, or we didn't populate cost of sales. Your net profit here is high because we didn't populate some of the expenses that we need to populate in year one. So we'll do that in just a moment. So this is how all of these things work together onto this toolkit that you can use. Simplified, it saves you a lot of time. It gives you a better understanding. It gives you an insight into all these different elements of your financial projection and financial cash flow. So let's populate the staff costs and see if what we are trying to achieve will work together. The managing director, it's very nice to get paid. How much do you wish to pay yourself as the owner of this accounting practice that you want to start up or are starting up? Let's say we're working in tens of thousands, so let's say 11,500. This can go to 35, this can go to 150, but let's work with figures that do relate to what we put on in our earlier sheets. Otherwise, there's going to be a big mismatch. Chief Financial Officer, not applicable for now. Teachers, not applicable for now. You can change this, you can customize this to whatever it is that you need. Admin officer, you're gonna need one admin officer. I don't know how much you're going to pay them. Let's put 8,500. And already you can see that when I put in 8,500 there, it's already calculating the increase for year one at 8%. If we put in an 8% increase, no, this is year one, this is the first year, meaning 8,000 times 12 will give you 102. But in year two, should you increase their salary by 8%, then they're going to go up a bracket to 110, and so forth in year three. So already it's giving you an insight into what your yearly cost will be, or what your cost in the second year will be, and so forth and so forth. You're gonna need a receptionist, of course. I don't know what you're going to pay them. Let's put in 6,500 for argument's sake, and then you will see that your staff cost already is 26,500. Figures always put a lot of emphasis on the fact that these are just random figures. I don't know if they're market related or not at the moment. Bonuses, if you want to pay bonuses, if you want to pay them 100%, 50%, you can put in a formula there to calculate these bonuses. If you're planning for that, it's something that employees mainly expect almost all the time, but the labor law does not enforce you or have that law on you that says pay them. So it's at your own discretion. So have a look at that, but it's best to plan for such, because if you don't, then your budget or cash flow also will be upset. So we can see that in year one already, we need to at least pay 350 nearly worth of salaries to all our employees. So what we are forgetting here is that what I need to put a lot of emphasis on is that the 344 is not cost to company. So this is one thing that many of my clients are struggling with. They forget to plan for cost to company, because on top of this, the employer must contribute 1% for UIF. So on top of all of this, there should be another 1%. So if you put these together, you can see already that we're looking at a figure of nearly 100,000, because it's 30 something. It's about 30 something if my calculations are right. Let's quickly confirm. Times 0.01. No, it's 7,000. So put those two together, SDL and UIF, you will see that you will need an additional 10,000 in order for you to get to cost to company. So these are some of the things that you need to plan for. Put that together, you will see that some of these figures are changing because of the information that we're populating year one, year two, year three, and some of the highlights. Our net profit now is going down because we are putting out some of these. We are populating some of the expenses. So let's quickly populate the last spreadsheet, or the last sheet that needs to be populated mainly, and then you will see that all of these come together and you will have a better understanding. So the only one that you're going to spend quite some time on is the profit and loss year one, where you will need to populate these expenses monthly for all of them in order for you to get across and to get to the figure that we need. So accounting and legal, like we said, always I'm going to put in some random figure. How much do you pay your accountant? If you've got accounting and legal, you are the accountant, or you're employing somebody, perhaps legal, I don't know, plan for such, put in those figures there. You can throw them around, you can copy, you can paste, you can do anything. You can run formulas to take the same figure across. That's where your Excel skills come back into play. Always plan for advertising, because what I've picked up in many businesses is that the figure for entertainment is always high and there's zero figure for advertising. So how do you expect your business to grow when you're running a business like that? So this is one thing that I always advise many people that I work with, that yeah, it's nice to go out and have lunch with your clients, but also put in some figure for advertising. Your LinkedIn post that my colleagues spoke to earlier, your LinkedIn post, your social media promo, adverts, all of those is very important. So put in some figures for that and plan ahead, because at the end of the day you want to grow. So it's up to you, whatever it is that you want to put in or plan for monthly. So you can populate whatever figure you want. I'm just putting in random figures. Bank charges are always important as well. They'll always be there, so you can put in random. This is so basic and this is so standard that I believe we can easily populate. So I'm just if you've got another key expense here is doubtful debts. Doubtful debts is one thing that even IFRS will request you to plan for according to the new reporting standards. So whatever it is, if you're contracting these clients, please make sure you make an allowance for doubtful debts or credit losses and so on and so on. So with only those populated, we can see that almost at the end of each and every month, we need to plan for at least income tax expense, which should run at a formula which says net income, like before tax times whatever the rate is. It was 27%, it was 28. Okay, gives me an error there because there might be a formula. The sheet might be protected, but please put in a formula here to calculate income tax almost monthly and run it across and advise your clients properly, because this is one area which many of our clients are struggling with, income tax. So with this spreadsheet, it's very easy for us as accountants to plan for our practice income tax. You can even put another spreadsheet to plan for VAT and all your VAT expenses, because now you have an idea of how much you're going to generate each and every month or each and every 2 months, since your VAT is bi-monthly. So there's a lot that you can insert. There's a lot that you can play with. It's not only limited to these spreadsheets that are here. Profit and loss year 3, you will see now that the rest of the presentation that I'm going to show to you, we're not populating any figures. We're just reading from the 3 spreadsheets from which we populated some figures. So we will see, based on the figures that we typed onto the system, that in year 1, our revenue it's expected to be at least 912,000. We can see that our gross profit is 100%. It's always best to know what your gross profit percentage is for all those formulas and reporting, and for better understanding and practice. All those expenses that we typed in and work together, from startup costs all the way to loan amortization, all those expenses, when it's all recorded onto the system, they add up to nearly 500,000. And already you can see, just by looking at the spreadsheet, that your expected profit for the year, for the first year, is at least 499,000. And what it does is that it's calculated the income tax expense for you, because like we said, many people are struggling with this. So we know already that from whatever we do, we know we owe the receiver of revenue at least 140,000 rands. So this gives you an idea for when it comes to tax planning. How can we plan for tax? Because should you lose some of the receipts, should you lose some of the slips, you're not going to be able to prove those expenses. Which expenses can you lower? Which expenses can you sort of take down? Which income streams can you up if you want to take this net income even higher? But of course, you're not going to be able to do that if you do not have some sort of planning. So let's go back to sales focus year 3 and say in year 2, I want to grow all my sales figures by a figure, let's say 25%. And then in year 4, I want to grow it at least by 15%. I'm going to put in a lot of effort into marketing in year 2 to grow it at least by 25%. So all of those growth numbers, as you play around with them, it will change your highlights, it will change your net profit, everything is going to change. And then it's going to give you a better idea of where your practice will be. Because number one, if you need that loan to be on the loan amortization, they will look at the profitability of your business. Will it be profitable? Will it still be standing in 3 years' time? Or are we hitting and hoping like we already have said? Some of these figures that we've populated onto the yearly profit and loss will run to the break-even analysis. So I've set that up and I've taken the average sales unit price. So of course you can do a mixture of all of these. You can use a sales mix. If you remember those lessons from high school, because you've got 3 different pricing structures. You can do weighted average, you can do whatever it is that you want, but here I've only taken the middle one, which is our best on the menu. So if we're selling only those at 1,850 per month and so many clients, I remember putting some figure there, are we going to break even or are we going to run at a loss? So already I can see here that fixed costs will run to at least 34,000. That's what we need to cover each and every month. And this system tells me that if we only selling, or if we only putting out that pricing option of the middle one, we need to find at least 19 clients each and every month in order for us to run this accounting practice successfully. So should we get 18 clients or should somebody fall off, then we're not breaking even, we're having a problem. From client 20 onwards, like we know, we are starting now to make a profit in our accounting practice. So this is what the tool does. It gives you an insight of how many clients do you need to put an effort into finding in order for you to meet all your budgetary expectations. So the balance sheet is the last thing we're going to speak about, and some of these figures, like we said, you're not going to type in, they're going to pull from all these different information that we gave the system. So like you remember the 107,500 from our startup costs, that's where it is. If you need a vehicle, if you said earlier in your startup cost that you're going to buy a vehicle via lease or whatever, it was going to populate here. And then going down, it will show you that all your long-term debts and so on, all those figures will sort of play around in the balance sheet. And some of these figures will obviously need you to work out like the short-term version of that loan or amortization, which is the 12 months version of the entire 3-year lease, which you need to split between your entire loan and what you need to pay off in the next 12 months or so. So that is the split that you need to do. But already I've done that for you. Owner's investments, as you can see, it's 50,000 there. We didn't put it in. It pulled through from the earlier input that we told or gave the system. 499,000 is retained earnings. Where does it get this information from? From the profit and loss that we just populated or put together just moments ago. And then you will see, okay, obviously for now my assets will not be equal to my liabilities because these figures do not make were just figures that we put together through guesswork. So put together the figures will work better. Put together the figures are going to be even more understandable, and even they will make even more sense than they do now. But the last thing that I want to share with you is what we have done at the bottom of the balance sheet is that we also have put in a formula to sort of calculate the ratio, the common financial ratios that are needed for financial reporting. So it does that for you as well. The debt ratio, you will see that it's high at 2.41. The current ratio is 0 because you do not have current liabilities, or some of your current assets are not there. But if you put figures onto your current assets, this will populate. And your working capital is at a negative. So already we can see, you and I, that our practice is going to have issues unless we do something. So it means we need to go back to marketing and budget more for marketing and get our 20th client from our break even, get our 21st clients all the way to the top, and the debt to equity ratio. You can add all other ratios that you want to suit your needs or customizational preferences. So this is one tool that I believe will assist you in putting together a financial plan for both your business and take advantage of the needs of your clients, because they will need such a tool. It's very important for you to engage with your clients. It's very important for you to find some time. There's a best quote that I like from one of famous Nigerian business people. They say, you need to work on your business before it starts working for you. So you need to find at least an hour or two and do something like this, and it gives your business the long strategic direction that it needs. Do not hit and hope like how many of us started our practices back in the day when the systems were not there, the automation was not there, the workflows were not there. The many partners that SAIBA has, they sort of simplify almost all of the work that we need to do as accountants. So please do take advantage of that. Please do find some time and put together a template like this and use it and populate it. It's gonna give you the direction that you need. And like we said, the rest of the part, this is not the business plan, it's in its entirety. This is only one section. The other part, the theory part, will depend on what you assess as the strengths and weaknesses of your business, the market opportunities, the executive summary, and everything else that you know that goes into the business plan. But put all of those together, and the sky is not the limit when there's footprint of men on the moon. Thank you.
When it comes to changes in fashion, we're, working on it. When it comes to changes in compliance, well now, we're really trending. Maybe stick with the suit, Earl. Introducing the latest creation from the people at DraftWorks. DraftWorks Cloud. We offer an automated, fully compliant financial statement and working paper solution that keeps you up to date with all the changes. Our simple-to-use, cloud-based platform guides you through the auditing process. Financial professionals get real-time engagement collaboration with unlimited users. We've thought about everything so that you don't have to. Accessible directly from your browser, create a new client, and just follow the process. Per engagement billing ensures you only pay for what you use. No more annual fees. Simply import your trial balance from any leading accounting package or Excel and get started today. DraftWorks Cloud, the leader in financial statement and audit compliance technology. Looking good, Earl. DraftWorks Cloud, a product of DraftWorks.